What's up, everyone? It's Scotty with Money Investing. What a day in the markets. The NASDAQ here absolutely getting destroyed, down a little bit over 2% on the day, with the Dow Jones actually pushing higher, up over 75 basis points. What does that tell us? Huge rotation out of tech over to other sectors, more value-oriented, more defensive sectors of the market. So market definitely is a little bit spooked with the rallies that we've seen from technology and, of course, the NASDAQ. So hope you guys are doing great. As always, if you guys enjoyed this video, find it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. If you want to join, of course, be a part of our money investing community. We're almost at 4,000 subscribers, 4,000 members. And there is a 16% annual discount that's also available. You get access to the intrinsic value spreadsheet, the buy and sell alerts, the options alerts, and not to mention a lot of private videos and tutorials and educational content as well. So link's going to be down below, and we'd love to have you on board. This right here was the state of the market. The Dow rallying over 263 points. In fact, this is its 9-day win streak since 2017. S&P dropping over 68 basis points. NASDAQ actually was only down 1.5%. I thought it was down a little bit over 2%. At one point during the day, it was down 2%, but slightly recovered towards the end of the day. But nonetheless, definitely selling off quite aggressively. We did have over 3,700 stocks pushing higher. So that tells you a little bit about the market, because more than 50% of the market was advancing on the day. So 3,700 stocks pushing higher versus 2,300. But obviously the 2,300 stocks that were selling off, and more specifically the magnificent seven that we're selling off, basically make up a third of the market. And that's one of the reasons why concentration risk is real. If you are seeing a market which is very concentrated with a narrow breadth, doesn't matter if other sectors and stocks push higher. If those seven that make up over a third of the market start selling off pretty aggressively, market's going to be down. That's really the nature of the market and the dynamics of market breadth and the concentration here. So jobless claims came out, 228,000. This continues to suggest the strength of the labor market. The jobless claims, again, coming in on the lower end of that range and coming in way below consensus, continues to show us the resiliency of the jobs market in the US. This is something that Charlie Bilio also mentioned. So before today's sell-off, the S&P 500 is now 5% higher than where it was when the Federal Reserve started hiking rates in March of 2022. So even though we have seen over 500 basis points worth of hikes, the S&P 500 is now at a higher level than where it was when the Federal Reserve actually started raising rates. And this just goes to show how forward-looking the market is, right? So when we were anticipating all these rate hikes, the markets basically dropped from March 22 all the way through October in anticipation of this tighter monetary policy cycle. And now, since we are towards the end of this hiking cycle, maybe another marginal 25 basis point increase in July, and now the markets are looking up. Obviously, we have rallied quite a bit, with the exception for today. Today was absolutely brutal for tech, specifically for the market, but just goes to show the market's very much forward-looking, looking at the soft landing potential scenario, the resiliency of the earnings. We'll get to earnings in just a minute, but shares of the Dow constituent Johnson & Johnson rose 6% after the drug maker hiked its full-year guidance. Another Dow name, insurer Travelers, beat analyst estimates for revenue in the quarter, boosting the shares. And of course, Netflix was down over 8%. Tesla was down almost 10%. Did a video on them earlier today, so definitely check that out. And of the S&P 500 companies that have reported earnings thus far, 74% have exceeded expectations, and the strength in corporate earnings have created optimism for a soft landing for the economy as well. And BMO Capital Markets' Brian Belsky says in a note in the firm, and I quote, "Although number of bear market prognosticators, wow, that's a mouthful of a word, has certainly thinned out given the market impressive run, there remains a diehard contingent that have viewed recent trends as nothing more than a bear market rally for the markets as well." And retail investor bullishness surges to a 27-month high of over 51.4% in the latest AAII survey. So individual investor enthusiasm for stocks climbed to a 51.4% in the latest survey by the American Association of Individual Investors, up from 41% bullishness last week. And the 7th straight week bullish sentiment landed above its long-term average of 37.5%. So we've talked about this before. There seems to be a lot of investor greed. There seems to be a lot of bullishness. There seems to be a lot of sentiment that's been driving these rallies higher. I mean, you've got NVIDIA trading at 40 times sales. Tesla obviously had a little bit of a move higher, over 100% since the last earnings. We had, of course, Microsoft, Apple, NVIDIA, AMD, Meta. I mean, the list goes on and on. The Magnificent Seven, we continue to concentrate in those companies, and the sentiment was very, very strong, very positive. But as we know, with everything in life, and more specifically with stocks, nothing goes on forever. Obviously, at some point, we're going to start to capitulate on the upside. We're going to maybe trade sideways a little bit, consolidate a little bit sideways, and then we see some profit taking. And same thing happens on the way down. We can't keep selling off forever. At some point, there will be capitulation. We will see all the sellers who wanted to sell the stock already sold out. And we will see stock prices kind of consolidate sideways, and then the buyers can start to step in and grab those deals. So that's really the pendulum. That's really the market cycle. It ebbs and flows every single time. And, that's something we have to pay attention to. And of course, the main important key takeaway that I've talked about from these videos that you have to always understand is risk versus reward, right? Is the potential reward worth the risk that you're taking? Everything that we do is an analysis of risk and reward. Every investment that you make is going to have an opportunity cost. It's going to have a risk associated with it. And that's something that you have to analyze for yourself. So a simple example, again, NVDA, Tesla, very, very strong rallies. I'm not really buying at those prices. Why? Because the marginal upside, that's the return, the reward, it's just not worth the potential risk that these companies carry, because as prices go higher, risk goes higher. As prices come down, risk goes down. Existing home sales also came down. They slid 3.3% for the month, worse than the Dow Jones estimate for 2.3% decline. And the conference board said its compilation of leading indicators, including the S&P 500 stock prices, bond spreads, and jobless claims, among other points, declined for its 15th straight month, the longest since 2007-2008 period, and the 0.7% drop was slightly worse than the 0.6% estimate. And Zabinska LaMonica, senior manager cycle at conference board, says, and I quote, "We forecast that the U.S. economy is likely to be in recession from the third quarter of 23 to first quarter 24. Elevated prices, tighter monetary policy, harder to get credit, and reduced government spending are poised to dampen economic growth further as well." So we'll talk about, of course, we'll see if recession actually does take place or not. But this was the state of the market. A huge rotation out of technology, comm services, and cyclicals. Those are all your big tech and magnificent sevens, and going more towards consumer defenses, healthcare, energy, utilities, industrials, and financials. So a very strong rotation. You can literally see liquidity coming out of tech and going over towards the other sides, other sectors of the market. And this is a very, very good representation here. You can see technology, consumer electronics, communication services, consumer cyclicals, and all the big names. Amazon down 4%, Tesla down 9.7%, Google down 2.6%, Meta down 4.2%, Apple down 1%, Microsoft down 2.3%, NVIDIA down 3.3%, TSM was down 5%, did a video on them earlier as well. And all that money going towards healthcare, energy, industrial, utilities, defensives, and financials. So a huge rotation on the day today. So on the day, again, these three sectors absolutely getting crushed down on average anywhere between 2 to 3%. So underperforming dramatically some of the other sectors out there over the last 1 week. Again, comm services and cyclicals and technology are the big underperformers. Over the last 1 month, though, we still have pretty much most sectors in the green. Lean hogs, coffee prices, sugar, rough rice, orange juice all pushing higher, with cocoa, corn, soybean, and soybean meal all pushing higher. Bitcoin's back under 30,000 and Ether back under 1,900 as well. So going over to crude, again, just lots of consolidation sideways. So not really seeing a lot of momentum, just trading above $75 per barrel. This right here is going to be a very, very strong area of support. And resistance obviously is going to stay put at 81, close to $82 per barrel for crude oil as well. Talking a little bit about Bitcoin, again, lots of consolidation sideways. So we're not really seeing a lot of momentum. Instead, it's just trading under 30,000. We're seeing a lot of consolidation. Like I said, resistance is going to be all the way up to 31,700 to as much as 34,500 for Bitcoin as well for us to watch. And support level is going to stay put at 28,000. So this right here is going to be that support level all the way down to 25,000 for BTC. And for Ether, we're looking at a support at close to a level right here at 1835, close to 1850. And of course, the resistance is going to be all the way up to 1925 to as much as $2,000. And we have gotten rejected at that level a couple times. So this right here is going to be that first level of resistance all the way up to $2,000 for Ether as well. Volatility on the day was slightly higher. Even though the markets was selling off, volatility didn't really see a lot of momentum, only up over 1.67% for the VIX, trading at just under 14 levels. And of course, we did have the S&P 500 with a reasonable, sizable drop, and I actually pointed this out in our live stream, right? I mentioned this specifically, that a reasonable dip and a pullback is very normal, and I wouldn't be surprised for us to come down to 44.50. That's going to be that 21 exponential moving average, and that literally inside that circle, this is what I marked during the live stream. Wouldn't be surprised for us to see another 1.9, close to 2% sell-off remainder of this week going into next week, for us to see a reasonable dip coming down to that 21 EMA. The NASDAQ here, of course, also in the same boat. This right here was the pullback and the dip of almost 4%. And right now we're seeing something very similar, a 2.9, close to 3% sell-off. And that 21 EMA in line with this right here, that support is going to be that next support level to watch at 13,800. A very, very strong level for the NASDAQ. And that means another potential 1.5, close to 2% pullback for the NASDAQ. Actually, that's so weird. It does show it's down 2% here, but it shows on Webull the NASDAQ was down over 1.45%, closed at 14,150. And over here, it says NASDAQ closed at 14,063. That's quite interesting, isn't it? I mean, it's different data for both of these, Webull and TradingView. I'm going to go off of TradingView because I think TradingView is a lot more accurate. Webull does glitch out a little bit and does delay some data sometimes. So I'm going to go off of NASDAQ here, down 2%, so definitely very brutal on the day. But next support is going to be that 21 EMA in line with that support at 13,800 for the NASDAQ. Talking about Apple here, Apple also pulling back. Again, the all-time high sits at 198 to sub 200. Resistance is going to stay put roughly at around $194, $195 per share. And of course, that 21 EMA is going to be that support at 189, close to $190 per share. Of course, if we do get a breakdown below this level, again, that's the technical trend. We're consistently making higher highs and higher lows. We're pushing higher very, very consistently for Apple. If you do see a bit of a breakdown below that 21 EMA, I wouldn't be surprised for it to come down to 177. That's going to be that next support level. And of course, my fair value sits in the 120s for Apple. Talking about Amazon, and Amazon here with a pretty sizable drop, almost 4%. And this right here, the 21 EMA, is going to be a very, very important level of support to watch for Amazon. Looks like we're starting to creep down a little bit below that level. And if you do see a breakdown, then we got to be ready. We have to, folks. I'm going to say it once, and I'm only going to say this once. All right? We have to be ready for if and when these technical levels get broken down. The 21 EMA is holding up for Apple, for Amazon. Tesla broke down today. Google has been very much back and forth. NVDA is holding up as well. And that, as a result, the NASDAQ and the S&P are trading above their 21 EMA. The moment we see a technical breakdown below those levels, you have to have some proper risk management or even hedge your positions to the downside with covered calls, or you're going to get blindsided. So that's something. If you are interested in learning how to sell options to hedge your potential downside, link's going to be down below. We'll love to have you on board and go over options and different strategies on how you can protect your positions that you already have. So again, Amazon, keep a close eye at that 21 EMA, 129, 130 is going to be that level to watch. Next up, we've got Tesla, of course. Tesla broke down today, unfortunately. So we saw a pretty sizable drop below that 21 EMA. And unfortunately, the next stop's going to be 240. So this right here is going to be that next support level to watch for Tesla. And that's going to be another maybe 6 to 7% drop for this company moving forward. Talking about NVIDIA here. And NVIDIA is still above its 21 EMA. It's still been validating, but it's getting very close. So 439, 440. This right here is going to be that support level to watch for NVIDIA. And of course, if we do see a breakdown below this, then I wouldn't be surprised to see sub 400, low 400s to even sub 400s down to 370s or 300, 350s as well for NVIDIA, because 40 times sales absolutely just does not make any sense for this company. So support level is going to be staying put at that 21 EMA and that support at 440 for the time being. Talking about advanced micro devices, a very sizable drop back below that 21 EMA. So we did try to recover a little bit, rally 12, 13%, but coming right back down. Support level is going to stay put at about $106, $107 for AMD. And of course, a breakdown below this could send us down in the 80s. That's where my fair value is going to be for advanced micro devices, which is where I would be very much interested in dollar cost averaging a little bit and buying and starting a new position in this company as well. So AMD, low 80s is going to be the level to watch. Talking about PayPal, and PayPal here on the day also selling off 1.6%, but outperforming the NASDAQ and outperforming a lot of individual stocks here because it wasn't down as much as some of the other companies. So support level is going to stay put right over here at close to $71, $70 per share. We're getting a little bit of that rejection from that 200 simple moving average even as high as that 300 SMA. So consistently making those lower highs and getting rejected, and support level is going to stay put at $70, $71 for PayPal moving forward. Talking about Square here, Square starting to pull back as well. We talked about Square as a potential short trade idea, didn't we? We talked about it as it was very, very overbought. RSI MACD is looking extremely overextended. It's coming up to its resistance. So again, it does, make sense from a short trading perspective, where support level is going to stay put down to $70 for Square, and resistance all the way up to as much as $83, $89. So inside this red rectangle is going to be a very strong resistance area to watch for Square as well. Talking about Meta platforms, and Meta, with a huge red candle coming down over 4%, that 21 EMA is going to be the one to watch. And as we have already discussed, it is going to be quite interesting, because Meta is also been on this very nice consistent uptrend, and a breakdown below this 21 EMA is going to be alarming. It is going to create this sort of technical sentiment where we are starting to see a bit of a profit taking, some more sell-off, and the entire market could be vulnerable for a reasonable correction. Again, I want to be very clear. I'm not saying that we're going to start seeing this huge, massive sell-offs and down 20%, 30% again, but given the fact that we've rallied so much and we are trading in an uptrend, with that 21 EMA being a very nice, good, respected support, if Apple, Amazon, Tesla, Meta, NVDA, Google, all these companies, big tech companies, break down below that technical support, the NASDAQ is going to be vulnerable for a reasonable correction, which is about 8 to 10%. And that's something that we need to be prepared for, right? Would you much rather be prepared for it or not know about it, right? I would much rather know about it and be prepared for it than to never talk about it and not really know about it either. So that's something to keep in mind for a lot of these companies. Talking about Netflix here, again, just kind of starting to creep down below the 21 EMA. You can see that we're starting to break down below 440, and the next support really is going to be 397, close to $400 per share for Netflix moving forward. So that's going to be that resistance, that support, and we got a lot of volume today. Resistance going to stay put at 459, close to 460. Google here, also breaking down below the 21 EMA. Like, what is going on? We're seeing so many breakdowns, and support level is going to stay put at about $115 per share for Google as well. And then finally, we got Microsoft, Shopify, Enphase. Microsoft still holding up its 21 EMA, a very, very important player in, of course, the market. Almost a $3 trillion market cap, a little shy of 500 billion here, but 21 EMA sitting at 341. Support level is going to stay put down to $322 for Microsoft as well moving forward. And then finally, we got Shopify and Enphase. Shopify at that 21 EMA, very close. If you do see a breakdown, well, get ready for us to see low 50s. That's even a possibility there for Shopify. And right now, we're just kind of trading at that support. And then finally, we got Enphase, which did have a pretty brutal sell-off, down over 5%, holding up its 21 EMA resistance, again, getting rejected at 188, 189. So this right here is going to be a huge resistance level for Enphase. And if we do get a breakdown, I wouldn't be surprised to see Enphase down in the 150s moving forward as well. So hope you guys enjoyed this video and a complete update on the market. The NASDAQ doing what it does best, definitely selling off quite aggressively, down over 2%, with the S&P also selling off. A lot of huge rotation out of tech, out of big tech, out of Magnificent 7 over to other parts of the market, and the Dow doing really well. So hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount available till the end of this month, where you can take advantage of it and, of course, get access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included. As always, happy investing. I'll see you all in the next video.